Hi everyone, welcome back. My name is Sanjana, and in today's video I'm going to talk about why I've decided to pay off my HECS / my student loan. So if you're interested in finding out why, then please keep watching. So I recently engaged a mortgage broker to come over and sit down with me to have a look and see whether there was any potential for me to purchase any more properties to add to my investment portfolio. I wanted to see if he could refinance my loans and see if there's any equity there so that I can purchase additional property without having to put too much as a down payment out of pocket. Now, if you're new to my channel, you may not know, but I have got an investment portfolio, property portfolio, where I did actually purchase 3 investment properties in about 2020, and I extracted the equity from my first investment property to be able to purchase my second and third one. So I'm trying to do the same sort of thing here and hope that there is existing equity, that my properties have actually appreciated so that I can purchase more property. So currently, to paint the picture for you guys, I have a HECS or student loan, which is about $24,000. So this was accumulated when I was at university studying my Bachelor of Commerce degree. And at my 9-to-5 job, when I was working a full-time job, I was earning about $103,000 in terms of my salary. And obviously, if you do reach a certain threshold, which I will talk about a little bit later on in this video, if you reach that threshold, as per the requirements of the Australian government, you are meant to pay back a certain percentage of your HECS or student loan. Now for me, given the threshold or the limit that I was in, I had to pay about 7% of my student loan back. Even after all of those years of working, I still have to pay $24,000 back. So after speaking to my mortgage broker, we came to the conclusion that I did actually have usable equity. So within the 2 years of me purchasing those properties, I have now got enough equity in there. So in the first property that I purchased, I have about $107,000 worth of usable equity that I can take out to purchase another property. And also in my second property, which is a duplex where I earn 2 incomes from, I've got about $45,000 sitting in there, which is of use. So let's talk about refinancing. What does that actually mean? So refinancing basically means that you are looking at your current loans and you're trying to figure out if there's a better interest rate out there, a more favorable rate for yourself, better payment conditions, a better schedule, and other contract terms which may be more favorable to you. And what you do, if you do find something that is, then you will replace your existing loan and revise your current conditions, and that may be with another bank. So this is where you take all your business to another bank. So when you go ahead and refinance your loans, the same sort of process applies for when you are purchasing a new property, in that you have to do serviceability checks, you need to check your borrowing capacity, you need to provide about 3 months of payment slips or pay slips from your existing job, your full-time job. So I'm gonna have to go through all of that again, which I have actually already provided to my mortgage broker because he's currently refinancing the loans for me at this stage. So personally, for my scenario, the reason that I am refinancing is because my current bank is not able to match other interest rates out there on the market, so I'm taking my business elsewhere. Also, if you do decide to take your business elsewhere, then you are able to get some cash back as well. A lot of banks are doing different cashback schemes where if you refinance, you could get about $2,000 to $5,000 depending on how much your loan value is. So once I've completed that process of refinancing and moving to another bank and all of that stuff, I'm then able to take out the equity. Now, obviously after taking out the equity from my existing properties, so my existing loans, that means then my loan to value ratio is going to go back up again. So obviously during this whole time, I had been paying down my loans, principal and interest, and now that I am going to take that equity out, again, my loans are going to boost back up to about 88%. And obviously this is why you have to do serviceability checks, because the bank wants to know whether you can actually afford that or not. So once the equity has been extracted, that money will then sit in my account, and then we can go ahead and begin with the property purchasing process. So given the amount of equity I have, I can potentially purchase maybe 2 small investment properties or 1 big one. Now here comes the part about my HECS or student loan. So just quickly to talk about HECS or my student student loan here in Australia and how the system actually works. So basically you have the option of paying your HECS enough, you are able to pay it upfront, and there is a little bit of a discount as well which is applied to you. But if you're not able to pay it upfront, then you can go on a payment scheme over the next 20 to 30 years depending on how much income you make. So I'm going to go through a payment calculator. It's just one that I found online to show you how much HECS you're currently paying and how it's all determined. So if I jump on here, it's just a pay calculator, and I've just put in an average annual salary of about $85,000, and I've clicked yes, include super, yes, you've got a student loan, and you can obviously have a look at all of the other categories here as well, depending on what you have and what you don't. And then if you scroll down, you can see that on a fortnightly basis, your student loan, based off a $85,000 salary, fortnightly you'll firstly earn about $2,163. That is your net payment, and then your student loan is about $148.60 per fortnight. That is how much is coming out of your account and being paid towards your student loan. So I'm going to also just show you, because there are new revisions in terms of what percentage of HECS payment. So I'm also going to take you through some new changes that are coming into effect in July this year, I believe, and definitely going to impact the percentage of HECS payments that you contribute towards paying off your student loan. So let's have a look. So at current, the compulsory repayment threshold for this year is about $47,014. So if you earn an income above that, then you start getting affected by the HECS threshold, and it's obviously on a sliding scale. So depending on how much you earn, if you earn more, then you need to pay more HECS. But if you have a look here, the rules are changing. So the compulsory threshold for this year will be about $48,360. So as you can see, that has gone up. And the last bracket is obviously if you're earning above $137,000, then you need to pay 10% of your student loan back. Now, as we can see here, these numbers have obviously increased. So if it's below 48, you have to pay nil, compared to the top here where you need to pay 1%. So it's definitely in favor of everyone. I suppose this is in line with inflation rates as well, and how the cost of living is definitely going up. So as we can see here, the highest threshold is now $141,000, which is for 10%, as compared to the $137,000. So if I wanted to actually make two big investment property purchases, it was just getting a little bit tight in terms of my serviceability. So then my mortgage broker decided to have a look into the calculator and see that if I did decide to pay off my HECS, how would that impact my borrowing? And we found out that if I did actually pay back my $24,000 of HECS, that would definitely increase my borrowing capacity, and then I could potentially make those two big payments. And that is why I'm actually looking at repaying my HECS loan back, just so that I can increase my investment portfolio and leverage my previous properties to purchase more and acquire more properties, so that I am working towards financial freedom for myself. Now, if this was a normal scenario and if I wasn't really interested in paying back, then I would really have no real reason to go out of my way and contribute voluntarily towards my HECS. But I am not of that mindset. I feel that I want to definitely, grow my investment portfolio. So that is why I'm taking this step to move forward and look at purchasing more investments. Otherwise, I would definitely not have considered it, because your HECS is already getting taken out of your account every single fortnight, depending on how much you earn. And of course, you can pay off your HECS. It's totally up to you if that's what you desire. A lot of people don't like having debt under their name, but personally for me, I feel like it's something that you don't really get reminded of. You don't see it in your bank account there as a negative, and it's just slowly chipping away in the background, and you really don't feel it that much. So that is why I have decided to pay off my HECS in full, so that I can purchase more investment properties this year. So if you are interested in following my journey around that, then please do follow me over on my Instagram and my TikTok account, Success by Sanjana, and I will catch you guys in my next video. Thanks, guys.